Hello traders, this is Rick with Hit and Run Candlesticks. How you doing? Hey, today's date is September 22nd, Sunday, September 22nd, 2024. And I've got four charts that I want to look at here on a case study basis, if you don't mind. So it shouldn't take too long, but I'll try to be as thorough as possible here, okay? I'm going to start off today with a loser. Now, as you know, we like to think that traders can have, say, 100 trades in a row that work out. It just really doesn't happen. Even 50, 40, 30, 20, 10, it's pretty rare, to tell you the truth. So we all have losers. We all have to accept it. Not every case study has to be on a winner. So let's take a look. We're going to start with a loser, okay? SPCE. Now this is a chart here that I entered on the, right here, the 17th of September here. So I entered on this hammer. You can see that we had this rally to the upside. We pulled back and put in this hammer here, so I entered on this hammer. Well, notice right down here I wrote bullish engulf and RBB around the corner. Well, the bullish engulf, this candle right in here, engulfing, and then we had follow through on that engulfing over the 50 period moving average, which is the blue line. And then while it is almost a rounded bottom breakout, RBB. This is one of my favorite chart patterns, the rounded bottom breakout, the overall setup. And the thing of it is it didn't actually, or it wasn't actually a rounded bottom breakout. We had price over the 50 period moving average, but you see this black line right here? That's the T line, or the 8 exponential moving average, and it did not cross over the 50 period moving average. And you see these green dots and red dots. That's what we call the trend indicator here. And if it's red, it's bearish. If it's green, it's bullish. We didn't have that over the 50 period moving average. So bottom line, I rushed the trade, made a mistake, but we could have had follow through. That's what I was banking on, but it didn't happen. So I end up closing out space on this gap down. I believe that was Friday. Friday. For a 6.85% loss. Okay, this was a stock trade. Alrighty, I hope that was helpful. Hey, if you have any questions or comments, leave them in the comments section below. I'll try to get to them all. What I'll try to do too is pull out a few of the questions, and then we'll put that on another video, okay? All right, the next chart that I want to look at for a case study is DLTR. So DLTR, we bought here on Monday the 9th as it crossed up over the T line right in here. Now, the chart that I was looking at, this actually, and I'm not going to get too much into the pinball setup on this session, but this is setting up for what we call a pinball setup, which happens to be the setup that really brought me out of the closet into trading full time. But the trade that I was looking for was that rounded bottom breakout. And if we come over here to the hourly chart, you can see right in there, our rounded bottom breakout kicked off right through here. And then that's where I ended up buying the chart. So we've got a pullback, 3/8 trap for those that are familiar with a 3/8 trap, and then we popped up and then just rode the T line all the way up to this day right here, the 18th, right? So bought it and closed it right in here. And this, let's see, DLTR, this was a nice little $2,000 gain. I mean, who doesn't like those kind of trades, right? So that was a very nice gain in a relatively short period of time. You can see it right here. Bought it one day, the next day, and then the third day we ended up getting out of it. The next case study that I would like to talk about is Amazon. So Amazon, I've been, on and off with Amazon for quite some time, trading it. And so Amazon here, you can see we're below the 50 period moving average. And the 50 period moving average is that blue line. And here we closed up over the 50 period moving average. You can see the trend indicator there turned green. The T line was over that 50. And then we rallied up 1, 2, 3, 4, we'll call it 4.5 days, right? And then we gapped down. And that's what I wanted, was a pullback more toward the T line in that what we call a 3/8 trap entry. So I bought the doji right here on the 3/8 trap entry, held it, and I closed half of the position here on Thursday. Whoops, let's move this over. I closed half the position on Thursday, there we go, on Thursday the 19th for a 31% gain, or just over $1,000 gain on it. Now, I'm still in half the position currently as of September 22nd, 2024. So we'll see what this does going forward, and I'll give updates on it in another case study, okay? Here's another one that I would like to share with everybody. Here's one that I sent out to members of the trading room, or members of Hit and Run Candlesticks. I posted in the trading room and on the members app. So no matter where you are on the app, you would get the alert. And what I did is I posted this on September 16th, Monday, September 16th, right here. You can see, let me get my little drawing tools. There we go. This chart pattern that we have right here, that's called a Fig Newton chart pattern. And that's where you have a bullish day, not so bullish, and then a bullish day. Like the Fig Newton cookie, you got the outside cookie, the fig in the middle, and then the outside cookie here. So I sent out an alert on that. And this is also one of those rounded bottom breakouts. I love that setup. You can see here that the black line was over the 50 period moving average, and that's the T line, or the 8 exponential moving average. And then the trend indicator was just getting really close right in there. And it popped up the next day, and we went up. You have a little bit of a pullback, but the trend indicator stayed green. And then we ended up with a little bullish piercing candle here on Thursday. And this is Friday, what is it, the 20th? Friday the 20th? Yeah, this is Friday the 20th, 2024, if somebody's watching this video a year down the road. We closed up very nice, headed for one of our first targets, first main targets, and we call that the dotted deuce right there. It is the 200 period moving average with a few twists and turns on it. And then we'll be looking for about that 1680 area, or about the 200 period moving average right up here on this one. So, hey, I hope this case study video helped you. Again, if you have any questions, drop them in the comments below, okay? Thanks very much for watching the video. This, again, was Rick with Hit and Run Candlesticks. Hope to see you in the trading room. Take care and have a great trading day going forward.